Okay, moving right along. I'd now like to introduce Casella Waste. Today we have with us CEO and founder of Casella Waste, John Casella, and IR Brian Butler. Casella is based in Rutland, Vermont. It's the fifth largest waste service provider in the U.S., providing integrated waste services in the Northeast and Mid-Atlantic. John founded Casella Waste in 1975. Brian recently joined. Welcome aboard, Brian. Previously covering the industry at Stifel. The company has 68 million Class A shares, 1 million Bs, trades around $112 for a $7.5 billion market cap, and $750 million of net debt. Welcome, gentlemen. Let's sit down and have a conversation. Well, thanks so much for being here, John and Brian. Great, welcome aboard. And
thanks for having us.
Yeah, this is wonderful. Yeah, thank you for always supporting us. You've been here every year. John, maybe we should start out probably some of the biggest news going on relatively for you guys in particular. You've been quite acquisitive over the last few years and grown significantly. Much more than I'd say in the past. Can you tell us a little bit about the growth and how you maintain your culture as a company, integrating those businesses after you buy them?
Well, it's a great question. I think one of the challenges that we have with that kind of growth, where we've added 1,000 people in the last year, is significant. The reality of our business is the price of entry from a waste business is to pick up the waste on time, and the reality from a differentiation standpoint is really people and culture. And what are your people doing to create that wow factor in terms of it's in the hospitality industry. It's what's the edge, what's the wow factor that you're incorporating. And it's the same thing in our business. As I said, price of entry is service on time when you say you're going to do it. But the reality is, what are you doing over and above that? And anyone can buy the trucks, can buy the equipment, the software, but what they can't buy is fully trained people. And so one of the things that we did about 3 years ago in the middle of COVID was to build our own CDL school. So we've put about 325 individuals through our school to fill the seats. Because of COVID, I think all of the transportation industry had a significant difficulty filling all of the seats from a driver and mechanic standpoint. And this last year, we also invested in our own maintenance school as well. So, and then on top of that, we bought a campus, a college campus, where we have just rebuilt that campus and are providing 3 training centers, one for ops training, safety training, as well as leadership training as well. So the real critical component in our view on a go-forward basis is how do we keep that culture as we continue to grow, because obviously with the growth that we had in 2024, we grew revenues over 20%, EBITDA over 20%, and free cash flow over 20%. So, as you said, Tony, significant growth, but that's a key component to our success on a go-forward basis.
John, you got a great point about keeping this culture, this training. Obviously you're much bigger now, but how are you going to market tapping into these labor pools? I know the market is probably relatively tight, is my guess, but can you talk about that?
It's another great question. We had to really rethink our HR department, because what was happening is if you're down drivers in a division, your ops supervisors, your route supervisors, possibly your division managers out taking care of customers, because the waste still has to get picked up, which means that you're not reacting to the opportunities that HR may be creating from an employment standpoint in terms of filling those seats. So we actually really expanded the HR department, put HR folks in the field to be able to react to all of the applications that we were getting to be able to fill the seats. So again, critical component, spent the dollars to build the HR department, and on top of that, obviously put the training facilities in place as well.
And and maybe moving to acquisitions. Obviously, I've followed your work, Brian, closely. You write excellent research. Talking about the pipeline. Focused on what you're focused on buying, in what geographies. John, maybe you could sort of just tell us where you're looking next. That you've done. You've done a lot, but there's probably more to go.
Sure. I mean, I think that we have a pipeline of about $700 million over the top of the existing infrastructure today. Most recently, in the last year and a half, we moved into the Mid-Atlantic, immediately bought 2 additional companies there over the next 6 months of making the investment in the Mid-Atlantic franchise. And I think that our strategic plan really is up and down the eastern seaboard. I think that clearly we don't have a desire at this point in time to head across the country, but heading further south, great market areas, great place to do business. So it's likely that we'll continue strategically to move south. But at this point in time, we have a significant opportunity over the top of the existing investment that we've already made.
I'm sure there's a lot of growth to be had. Maybe on the collection side, it's over 60% of your revenue. What are the important cost initiatives that you've focused on, and has that helped curb inflation in conjunction with your pricing programs?
Sure. I mean, I think Sean Steves, our Senior VP of Ops, has really done a great job of consolidating all of the integration from an acquisition standpoint, in addition to innovation and technology changes. So moving away from rear load trucks, moving to fully automated trucks wherever we can, really takes a lot of cost out of the business. We have a significant opportunity to continue to remove costs over the next few years as we settle in on one system. So exciting work that's being done in the back office now by a group of really dedicated folks.
Yeah, there's a lot of opportunities here. Maybe talk about your fleet overall, and maybe this ties into, we can talk about tariffs as well, but how do you expect the fleet to sort of evolve over time? How is your fleet right now, sort of maybe age of the fleet, and maybe sort of talk about a little more granularity?
Yeah, we're just below 6 years on the average age of the fleet. Obviously, some of those vehicles, like roll-off trucks, can have a much higher age, but our fleet is really in really good shape. We implemented about 10 years ago a 5-year fleet plan that we've kept in touch. I think a little bit of challenge with the manufacturers in terms of their ability to deliver, but fleet's really in good shape. And Sean's doing a great job of taking all, as I said, the rear load trucks off the road. It really does a great job from an overhead standpoint, eliminates safety issues, makes us much safer in the communities that we're serving, and utilizing technology that is fully automated technology.
In addition to growth, the company's landfills have been, an important part of your success story over the years. I know you've talked quite a bit about it in the past, but how tight from a capacity perspective is disposal in the Northeast, and how is this company positioned? You could just sort of allude more to that.
Yeah, I mean, I think that clearly there's a supply and demand imbalance in the Northeast. It's going to continue to get worse on a go-forward basis, in my view. We're going to continue to see capacity met at a number of facilities where they're just completely out of capacity and they're not going to expand. So we're going to continue to see disposal capacity shrinking. We, a number of years ago, bought our facility in McKean, Pennsylvania, which is rail-served, 5,000-ton-a-day permit. Because of the dynamics in the marketplace, we made the investment in rail last year at that facility, and we're bringing material in by rail now, just kind of shaking it down and getting our people up to speed in terms of handling waste by rail, just in anticipation of what may happen over the next few years. There's some question as to some of the facilities that are currently taking quite a bit of waste in the Northeast, whether they're going to continue to operate past this year.
Seems like a lot of opportunity and benefit for you, I'd assume. So maybe moving to your resource solutions business. and on your national accounts business, it seems to be an area of organic growth for the company. How are you winning there, and what types of customers are you winning? How do you maintain the inside track with these customers, and are there any anything unique to comment on the relationship perspective?
Well, I mean, I think that clearly we, from a overall solid waste strategy, going back to 1977, it was actually my brother that started the company, so I have to give him credit for that. But in 1977, we built the first recycling facility in Vermont, and recycling has always been a major component of our waste management strategy. So when we think of our verticals in terms of municipalities, helping them meet their sustainability goals, colleges and universities, higher ed across the board, medical centers, industrial customers. So we have customers in 46 states now. We only operate equipment in 10 states, the 10 Northeast states, into the Mid-Atlantic. But we have customers across the country where we could go in and put 5 or 10 people inside of an industrial plant and help that organization meet their sustainability goals, help them with the process, manage the process from a waste and recycling standpoint. And that aspect of the business, as you said, Tony, is one of the fastest growing parts of our business now. And one of the great opportunities that we have moving into the Mid-Atlantic is we're only scratching the surface of the industrial component in the Mid-Atlantic. When you think about Bethlehem and Allentown, it's really the distribution center for the Northeast. Millions and millions of square foot under roof, that it represents a real opportunity for us from an industrial growth standpoint.
Yeah, I think you were definitely ahead of your time, John, and a lot of opportunities, you said, in this industrial space. You've made capital investments in a couple of recycling facilities, upgrading the equipment with more automation technology. If you could talk about these investments and what are you seeing on an operational perspective.
Are you ready for that one, Brian?
I'm sure you could talk very well to it.
Well, I guess the most obvious one is the Willimantic facility that Casella had upgraded over the last last year, so 2024. I think the expectation is that generates somewhere around $4 million in EBITDA going forward. But those are the kind of opportunities that I think Casella continues to have within its footprint. I mean, you look at the number of recycling facilities they have, 20 plus facilities there. You can find other places where you can, expand those, automate those, and kind of extract that value. And that's what a lot of the customers, and this is what John was, I think, alluding to. When you look at the Mid-Atlantic, you have a lot of those customers looking for solutions, and that's those solutions is where it's easy call to go to your vendor that's doing solid waste and say, hey, we have recycling. It's important to our customers now, and what can we do? So I think that's the opportunity.
I mean, it's really interesting, too, because the recycling facilities, not many people understand that we make more free cash flow per ton processing and recycling material than we do disposing of it. And that's because of the capital intensity around building disposal capacity. So we want to cannibalize ourselves from a overall standpoint in the landfill. If we can find a higher and better use for the material that we're taking to the landfill, we want to find that use. Our team is challenged with finding that higher and better use before somebody else does. We invested in our Boston facility. The other thing that's interesting about the recycling component is every 8 to 10 years, you're replacing that equipment. And one of the dimensions of that is innovation and technology has changed so much. So our Boston facility last year was the first time we added robotics and AI to that technology, and we did the same thing. That was a $20 million investment. And then, as Brian said, the Willimantic facility we did this year, and that's about an $18 million investment, and that's, again, moving to robotics and new technology. So that technology changes about every 8 to 10 years.
And maybe just touching on that a little more.
Actually, but.
It goes faster, right? It's like a Moore's law kind of thing. What as far as you talked about the $20 million and $18 million investment, and you'll probably just talk generally about this, but how do you look at it on a ROI sort of ROI, IRR kind of basis? What is the payback for making those types of investments?
It's all, after-tax unlevered returns. But, the Boston facility, as an example, we were able to increase the quality of the material by 38% and increase the throughput by 40%. So very, very, very significant opportunity from a productivity efficiency standpoint with the new technology.
Maybe we could switch over to, our RNG. I know there's been a lot of talk about RNG, and just maybe what your view on that is, maybe going forward as far as tax implications, regulation. Maybe you could sort of touch on that a little more.
Sure. I mean, we've taken a little bit different tack with regard to RNG. We've got partners that are developing those facilities. They'll invest all of the capital in the facility, have the risk from an energy standpoint. It's one risk that we chose not to have in our portfolio. We're developing RNG at 3 facilities currently, and we'll do another 3 over the next couple of years. Those facilities, again, are being developed by third parties. We'll sell them the gas, have a little bit of upside in terms of some of the conditions, but from a practical standpoint, it's not going to be a needle mover for us one way or the other.
Yeah.
And certainly don't have the risk. We can create more value by investing capital in terms of our continued growth.
That makes sense. Maybe moving to capital allocation, sort of, what you do with your cash flow. Obviously, your stock has rocketed over the years, done very well. How do you how do you allocate capital? How do you consider yourselves good stewards of capital?
So, I mean, I think that, clearly we're looking at all of, people ask us, well, what are you going to do from a growth perspective this year? And it really depends on making sure that we meet our thresholds from a return standpoint and meet our strategic perspective, which is growing free cash flow. I mean, that's really how we're allocating capital is, growing free cash flow, obviously maintaining the business, keeping the fleet where it needs to be, but it's really a disciplined growth that has really paid huge dividends to us in terms of our M&A activity.
And maybe how do you look at a little more further down? How do you look at your use of for M&A? Sort of how you look at obviously using stock versus cash or debt. What's your thought process there?
So I think from a practical standpoint, having been levered significant higher in my career and learned a very painful lesson, quite frankly, we'll stay levered around 3 times or under. We're under 3 times debt to EBITDA right now, and we'll look at even on the go-forward basis, as we begin to creep up over 3 times, we're going to be looking at delevering the balance sheet. So clearly, we want to stay, relatively unlevered below 3 times.
And would you think going forward using stock as a method for?
We would, for the right transactions. I think right now we have a tremendous amount of availability within our current structure. We don't have any anticipation that we're going to need anything at this point in time or in terms of going back to the market. But that depends on what flows from an acquisition M&A standpoint. But the driver there will be when we begin to lever up over 3 times.
Maybe you could sort of talk about what you're seeing out there in the M&A pipelines, or what the pipeline looks like, sellers' expectations, sort of how I know there's a lot going on right now with last night's announcement, but what are you sort of seeing right now?
So there's a lot of activity. I think one of the things that has happened, obviously, we've got a lot of momentum. You're only as good as the last deal that you did in our industry. It's a pretty small industry. Most people know everyone in the industry. And so we've got a lot of momentum because I think that our perspective in terms of M&A is we're not looking for the last dollar. We're looking to create a win-win. And that's the only way to do business. And I think that people appreciate it. We're looking also to grow and create the team for the next 20 years as well. So we don't have a lot of people sitting in Rutland ready to go to the next acquisition. So we're looking at the individuals that we're buying and trying to find ways to incorporate them into the future of the company, particularly those individuals who may be in their 40s and have built a business and want to have a better lifestyle with their family. So there's a tremendous amount to be said for how you do business, because it's always going to be out in front of you at the next acquisition before you get there.
That's a good point. Maybe talk about larger opportunities. Obviously, you said 5 years from now, the company you built, you're going to build in the future employees and the future teammates. Is there something out there that could potentially be more transformational? Is there something that you're looking at, or is that even possible? What do you see in maybe 5 to 10 years?
I think you never say never, but I think currently we're not looking at anything transformational. We're looking at continuing the blocking and tackling, continuing to do what we have done that has created a tremendous amount of shareholder value over the last 10 years. We've got $700 million of opportunity over the top of the existing infrastructure. We have opportunities to continue to move south. You'll see us continue to expand that 10-state footprint that we have now further south. So plenty of opportunity there. That's what we're focused on in terms of the strategic initiatives. There's nothing, in the horizon that we see at this point in time that's a big game changer or anything like that. Again, not to say that couldn't happen. Who knows what's going to happen next month, right? In terms of what's going to become available and what you might look at. But currently, our sense is to continue the blocking and tackling on the strategy that's been successful for us for the last 10 years.
And maybe going to the tariff question. So how do you view what's going on? Again, we've heard a bunch of people talk about the insular nature of the waste industry. How is it impacting you, or do you think it's going to impact you?
In terms of
are there issues with maybe getting trucks or obviously the imported steel or exporting recyclables?
I think that well, it depends. Did something happen this morning too?
No, I just
something new. I mean, what hour? So I think the board has asked me 4 times what tariffs mean, and 4 times I had to go back and rethink it because it's changed. So. I'm not sure what that's going to look like. First of all, we don't believe in what we have seen so far in the work that we've done, notwithstanding what happened yesterday, that it's likely to have a big impact on us. Commodity prices, we've been able to push that risk back to our customers about 10, 15 years ago. So we don't have a risk from a commodity standpoint with regard to recycling and those commodities. So we've minimized that risk, essentially taking it off the table. And, it really time will tell. I think that if the administration is successful in creating more manufacturing here, more jobs here, more economic activity here, that should be good for our industry in the long term. The question is, how long is that going to take?
Yeah, I mean, a good point on the tariff piece, though, for solid waste in general is, it comes through on the vehicles a lot of the time, but most of their buys are already done for 2025. So you're really talking about a 2026 kind of scenario where the impact would really be felt. And by that time, I mean, how much more change can happen? I mean, the tariffs might not even be in place by then. So it's one of those things that in the short term, it's great to talk about, and it's a great question to ask because, I mean, everybody wants to know. But the reality is that on a quarter to quarter in the near term, it's probably not going to have much impact beyond whatever the macro, economic impact is.
Yeah, you're right. It's a valid point, and there's a lot to go. I'm sure a lot to go for next year. Maybe talking about, we've talked about in the past PFAS. Maybe any opportunities you're seeing? Anything's changed? Obviously, new administration. Anything coming out of DC that you're hearing?
I think that PFAS is going to be here, on inevitably for years to come. There's no question about it. We have used two technologies. We have reverse osmosis to take the PFAS out of our leachate, and then we did foam fractionation with a pilot program with the state of Vermont. Rather than, pushing off until regulations were all, solidified and in place, we went forward with the Agency of Natural Resources of Vermont and put together a pilot program where we put in the foam fractionation unit. And we're taking out about 96% of 4 of the 5 constituencies of PFAS that they asked us to process for. And the 5th one was about 65%. So real success there. More to come on that. I think there's, more implications in terms of biosolids, land application. That's going to be an issue that's going to be in front of us for a while. But from a practical standpoint, we're looking at it as an opportunity. How do we use technology? What technologies are out there? What's the lowest cost technology that we can take PFAS out of our leachate? Because when we take the PFAS out of our leachate, then we can go to a broader array of municipal sewage treatment facilities, which none of the facilities in this country were built to process PFAS. So that PFAS is going into the lakes, streams in this country. And that would be a really good infrastructure project for the administration to upgrade the treatment facilities, but not sure if that's going to happen. So we can't wait. We need to figure out how we can attack that problem, and we invested about $6 million in the foam fractionation unit. We're excited about the results so far, but that's going to be an issue that's going to be around.
That's a good point. Maybe I'll open the audience.
John, thanks. Dealing on that, there are 40,000 open municipal water companies. When they go out and say, we need to have help with regards to the CapEx on PFAS removal or containment, do they also think about saying, we'll outsource our municipal waste treatment? And as a more mundane question, you've spent $300 million on CapEx, and the question is, if we do 100% depreciation, that's going to help you on your cash flow substantially, I gather. But the first one is more important.
Yeah, so it's really interesting right now, Mario. I'm not sure it's a real question as to whether or not that treatment should be at the municipal sewage treatment facility or not. But right now, we're being limited by the treatment facilities that we can go to because of the PFAS. So we're forced to do that treatment at the landfill before it goes to the municipal sewage treatment facility. We've got a couple of municipal sewage treatment facilities where we're handling the sludge for them, and we've got ongoing dialogue with them to help them, and we would participate. If there was a municipal sewage treatment facility that was, in our geographic region, we would participate with them in terms of putting treatment in. The interesting thing about the leachate from the landfill, it's not the only source of PFAS. Every industrial discharge has got PFAS in it that's going to the treatment facility. So even if we were to take care of it from a solid waste standpoint, it's still a problem for the municipal sewage treatment facilities.
Maybe I'll sneak one last one in really quick, and I'll probably have to. Oh, I'm sorry, I didn't see.
Just had a question regarding your M&A strategy historically and your current leverage. I know you mentioned you're below 3 times total and a little below 2 times net. If Bloomberg's correct, I see you have a $700 million undrawn revolver, so you've got about $1 billion of cash liquidity. What multiples, I guess, would make you more bullish on doing M&A, whether it's public or private, with the current macro backdrop, please?
What multiples of cash flow?
I guess cash flow or EBITDA.
I think that we're really looking at it from a free cash flow standpoint and looking at it strategically in terms of over the top of our existing business. So as an example, for a $100 million business, you're going to pay market rate of 10 or 11 times EBITDA. The smaller transactions are going to be 6, 7, 8 times. So once you get to a more mature business, you're going to pay a market multiple, which in some cases could be 10 to 12 times EBITDA.
Right, but I mean, I think from a bullish perspective, I don't think, you don't need the multiples to go down for Casella to really be looking to do more M&A. I mean, I think the pipeline is pretty good at the prices that they're seeing right now. And to what John was saying, even when you're at that, let's call it 10, 11 times, post a synergy scenario, you're probably going to take another turn or 2 turns off, depending upon how it overlays the footprint. So, I don't think we need a pullback in expectations on sellers looking or willing to accept a lower price at this point.
Yeah, I would agree. I would agree 100%. There's no question that we have more opportunity. I mean, you don't hear about the opportunities that we walk by. You only hear about the ones that we do. And we walk by quite a few because those just don't meet the threshold. But that doesn't mean that we're not paying market rates. We'll pay market rates for, those larger transactions for sure.
Well, it seems like you have a lot of opportunities to go, John and Brian. Thank you for being here today. Congratulations on all your success. Hope to have you back next year. Thank you.
Thank you. Thank you.